Hi, this is Lara and welcome to Elliott Wave Gold. This is the first gold analysis done on this website, the first of many. I'm going to jump straight into my daily chart for gold. My last analysis a few days ago of gold, I was expecting the end of a fourth wave correction to be followed by a sharp upwards thrust, which is pretty much exactly what we got. I was expecting price to end around about the 0.382 Fibonacci ratio of intermediate wave 3 down. It's just a little bit above that at 1399.73. I'll be watching this current daily candlestick really closely. If this candlestick closes down and we have a red candlestick for this daily session, then I expect we've probably had a trend change at intermediate degree. And I have a few things to look out for, different steps on the way to provide confidence and confirmation of that trend change. We will have final full confirmation that we've had a trend change up here when we have a full daily candlestick below this channel and not touching the lower trend line. Draw this channel using Elliott's technique for a correction. Draw it from the start of A to the end of B. Place a parallel copy on the end of A. Also, when we have price movement below this point here, 1348.27, at that stage, downwards movement can't be a fourth wave correction in an unfolding impulse upwards in a new upwards trend, because the fourth wave couldn't enter what would be first wave price territory. At that point, we will have full confirmation that this upwards movement is a completed three-wave structure, it's corrective, and we'll be expecting a five-wave motive structure to the downside. When I know where intermediate wave 4 has ended, when we have some confirmation, I will add to this target calculation at intermediate degree. I still can't do that for you today, maybe tomorrow. At 1151, primary wave C in its entirety would reach 1.618, the length of primary wave A. If we get much more upwards movement for intermediate wave 4, it can't move into intermediate wave 1 price territory. Movement above 1672.77 would invalidate this wave count at primary wave degree. The hourly chart has a trend channel drawn around minor wave C. Draw it from this low here of 2 to 4. Place a copy on the high of 3. I have two hourly charts for you today. They differ only in the degree of labelling. Let's look at the first, where the high of minute 3 within minor C here is this point here. So my last analysis looked at the possibility of a triangle unfolding in this position. That's not what happened. The triangle was invalidated by movement above this point. We can't have A, B, C, D because D moved beyond the end of B. So this fourth wave was over here, and the complicated bit was the B wave within it as a double combination, flat followed by a zigzag with sideways movement. That's exactly what combinations should look like. So minute wave 4 is over here, and this is where the final fifth wave up begins. We have a leading diagonal for a first wave, a zigzag for a second wave, an impulse for a third wave showing a really clear increase in upwards momentum, using MACD as an indicator of momentum, and that's exactly what third wave should do. A fourth wave probably over here. If it were to move further sideways, it can't move into the first wave price territory. Movement below 1381.94 would invalidate this first hourly wave count. This may be where the fifth wave has ended and has begun. If that's the case, then we have sub-minuet waves 1 complete, sub-minuet wave 2 may or may not be complete. When it's done, further upwards movement. At 1416, minuet wave 5 would reach equality in length with minuet wave 1. I'm calculating this target at minuet wave degree because at 1 degree higher, at minute wave degree, there's already a decent ratio of equality between 3 and 1. Importantly, this third wave is just a little bit, just under $3 short of equality with minute wave 1, and that limits this final upwards fifth wave to no longer than equality with the third, because a core Elliott wave rule is the third wave may never be the shortest, so I'm not expecting to see movement above 1423.84 for this wave count. Alternatively, if we just move the degree of labelling within this little piece of movement, this 5-wave impulse here, if we move that all up 1 degree, we may have seen the end of intermediate wave 4 if today's daily candlestick closes downwards. If it's a red candle, this would be my preferred hourly wave count. I would expect then that we may have seen a trend change up here. We have points and trend channels to use to give us confirmation and indication that this wave count may be correct. Initial movement below 1381.94 would invalidate the first hourly wave count, giving indication that this may be correct. I would still want to see a clear channel breach of this parallel channel drawn around minor wave C impulse upwards using Elliott's second technique to have any confidence in this wave count. When we have at least a good 1 or 2 candlesticks on the hourly chart below this channel and not touching the lower trend line, at that stage I'd have confidence that we may have seen a trend change at intermediate degree, and I would have full confidence in that when we have a channel breach of that channel around the zigzag up on the daily chart. So I'm expecting we may have seen the end of intermediate wave 4. It depends how this daily candlestick closes. We have price points and 2 different channels to use, depending on your risk appetite, to give you an indication and some confirmation of when we have seen that trend change. This analysis will be updated tomorrow, and I hope everyone is having a fabulous day.